Hi everyone, welcome back to another episode of The Download with Joe. I'm your co-host, Lewis, founder of LMC. I'm joined as always by Joe. Joe, how's things?
Yeah, things are good. I was telling you it was little bit of an early morning in our household this morning with little kids, but all in all, we're fine.
Nice. Fortunately, I think anyway, don't necessarily have that issue at the minute, so that's good. Well, it's good to be back. We had a week off last week. The week before that, we had a really great episode with tons of feedback. Probably one of the most engaged episodes we've had from this community and just anyone on LinkedIn or YouTube that have seen it.
Yeah,
We're going to talk about some recent M&A, but Joe and I, we were at NexusCon last week in Denver, and it'd be good just to give the community an idea in terms of some of the takeaways from our side. So
yeah,
I think firstly, Joe, I didn't anticipate how bad the altitude can strike you in Denver. I didn't realize it was 5,500
yeah.
feet above
It,
sea level.
you don't. I mean, for young, healthy individuals, like you, like us, you don't notice it just being there. You notice it when you start running or when you start doing something at kind of a higher. Hiking would be a good example if you're hiking, especially if there's elevation. So yeah, I think you organized a run, and I think that's where you probably noticed it the most. Just like getting off the airplane, it's not like I can't breathe, right? It's I'm going to go for a run, and after 2 minutes, I have to stop. I actually am not getting enough oxygen.
Well,
So yeah,
that's
yeah.
exactly how I felt on my run.
hmm
Yeah,
And when we first moved here, I felt the same way, trying to go on runs, and it took 3 or more months, even for somebody healthy. And everyone I knew here said, yeah, it'll take a couple months. But then you really don't notice it. So it takes a little bit of time.
no, I agree. I had the same thing. Drink lots of salt, or make sure
Yeah,
you're
they
keeping
had
your salt up.
yeah, those packs. Yeah, those are good. I usually just go with water, but everyone's a little different. So yeah,
Nice. So NexusCon,
yeah,
what were your thoughts? I don't think we've seen anything from your side currently on LinkedIn. I may have missed it,
yeah,
but
yeah. I
what do you
think
think?
so. I mean, first for doing putting on organizing an event year one, that's just a difficult thing to do, and this event went very very well. And the feedback I got from everyone I talked to was this was great. This was a little different. It was very valuable. Now you could argue if you're a vendor, it sometimes takes a few months to really look back and say, well, what did that really translate into? So your initial interpretation or feelings or sentiment about an event being very positive is great. I think time for some of these firms, you might say time will tell, but at the same time, they had the right people in the room. I think one, all the normal things you would expect from an event, well organized, well cited. It was at a good hotel. All that was great. I think that having the right people, there were definitely a good mix, and I think maybe a better balance. I know they strive for this, and I noticed this too: a better balance between we offer technology and we use technology, right? So you could say the buyers, the sellers,
Yeah,
or the sellers and the buyers. And the conversations were a little deeper, and I think a little bit less about we have this product and this product does this and this is our widget. I was on the demo stage. I emceed for part of the demo stage, and that of course was a little bit more like this is our feature, this is how we do it. But that was a part of the event. That wasn't the whole event. So I think it was a really well done event. I think the people who came, the one other side of it, I would say it was very much of the users, oriented to those who are already doing a lot of innovative things or already a little bit
yeah,
maybe ahead of the curve, more sophisticated users. And I guess an opportunity there is, between the Nexus organization generally, there's a big opportunity to level up, if you will, your skill set. But I think there's also an opportunity at an event like this. But that is almost like could be a separate part of the event, right? Like depending on, I mean, they had tracks based on role and tracks based on kind of like use case. I tend to think use case. I know they didn't use that word. But there's also potentially a different tracks for, or are you just learning? I mean, there was a little bit of that,
Yeah.
but I think it was a good event from the point of view of this is what we offer and how it's valuable, and this is what we're doing, and this is how we derive value out of doing it. And I think it was maybe a little more focused on that than other events where that's an underlying tone or underlying discussion point, but not necessarily the goal or the key point.
Yeah, I think that's fair. From the conversations that you had, what would you say is like one of the big trends or takeaways? Because I guess the side point of that, for me anyway, it felt the conference was more educational versus
Yeah.
we've got a booth, let's go out and sell, which is not a bad thing by any means. Quite refreshing
Yeah.
actually, but like,
Yeah.
what would you say one of the themes or trends were, like, just with the conversations?
I don't know that I heard this directly from a lot of the people I talked to, but I would say it reinforced my view that there's still quite a bit of overlap in the market. And I would say overlap from the point of view of, well, Nexus has the technology stack. I'll give you an example. So Nexus has their own technology stack. I generally think that's a really good way to think of the market. And I call it the technology stack. I think I forget exactly what they call it. Apologies. But they have data acquisition, they have the data layer, they have applications, so on and so forth. And so when I was doing the demos, this is one example of this, but when I was doing the demos, there was commentary or some notes that we had of they fit into this, they fit into that layer. And I think of the 6 demos I did, 4 of them maybe fit into multiple levels of the technology stack, which totally logical, right? I understand why a company would build various solutions. But I think when you look at it, if you actually kind of like mash it all together, you would say, well, there's actually a fair bit of overlap. And some of it's going to come down to, do you have fairly centralized use? If you're a university and maybe you're on 2 building automation systems rather than 5, you might say an independent data layer isn't quite as important because really we can build internally some integrations between these 2 BAS that allow us to have this unified layer. So you might look at a company that offers an application layer on top, but you aren't worried about the independent data layer. So anyway, all that to say, there's still this, I don't know if I would say issue, but there's still this dynamic in the market where you have a lot of overlap. I understand why. I think it's a kind of a natural way that the market has formed. And just talking to different vendors, talking to different buyers about, well, we use this for this use case, right? Because at the end of the day, the buildings are all trying to do similar things. We want to save energy. We want to identify faulty equipment. We want to optimize our HVAC, and then all the underlying tech that's required to get to those things. But there's different vendors being used. And I really don't know how to sort all that out in terms of, if you're a buyer and you look at this market and say, there's too many vendors. I don't know how that really sorts itself out. I think there's definitely some different folks have theses on how to do that, though. So that was the big takeaway I had, among others.
Yeah, interesting points. So we've got about 20 minutes to go through some of the latest M&A. And if you've tuned into these episodes before, then you'll know that there'll be some fairly recent M&A activity, and then a couple that you may have seen, but we can dive into a little bit more detail on that. With Rick LeBlanc being on the show last week, operating partner for Huron Capital, it makes sense to talk through one of the roll-ups that we've seen, which is Climatech, Coolsys, and I may pronounce his name wrong, but is it Science?
Science, I think, is how they pronounce it. Yeah, and those are 3 different firms. Yeah. So Rick Rick is an operating advisor to Science, which is an entity supported by or funded by Huron. Huron is a private equity firm, and they have this play not just in our industry but in multiple industries. And so this one, without going into details on specific acquisitions, Science has been an acquirer, and they're more focused on building security. But you have a few, I'll say high level, you have a few different types of entities that are buying up typically these local integrators, the local branches, if you will, right? Like, we're a company, we have maybe 30, 50, 100 individuals. We do a lot of work in this geographic area. Think of a metro area. and a lot of different buyers. There are different types of buyers of those solutions or those companies, and they're really focused on building a bigger geographic base and then a lot of the back office. So Science has made a couple acquisitions. I would say that in my newsletter, not this past month, which went on Sunday, but you're seeing them or one of the other Huron entities every couple months, and sometimes they make 2 acquisitions in a month. CoolSys, similar, private equity backed. They're a little more focused on the refrigeration and cold chain side of things, so refrigerated warehouses, building up refrigerated systems. If you notice, a lot of the refrigeration and HVAC are similar in that same concepts, right? Same refrigeration cycle, but equipment is different. Vendors can be different, and you're typically not shipping for a warehouse for sure, but even a grocery store, you're not shipping the refrigerators. You're building it on site. So if you've ever been to a grocery store, sometimes they're actually redoing the refrigeration. I was at a Costco maybe like a year ago, and our kids just thought it was fascinating because one whole aisle had been closed because they were rebuilding. Basically, they're building in a freezer. Maybe it was a fridge, but a freezer, a fridge. They're building it in just like in the store. So CoolSys is really focused on that, but they're going about this the same way. They're buying up individual firms. They're looking for some skill sets that they might not already have, but they're looking for geographically different firms and saying, we need a presence in this geography. Also private equity backed. Climatech has announced a couple acquisitions recently, but what's interesting there is they're a publicly traded company. They're owned by Bosch, which is a publicly traded company. So you have different types of firms doing this. Sometimes a subsidiary of a big OEM, sometimes a private company, privately backed. Private equity could be small, could be large. Sometimes one private equity firm will build, a 10-branch network, sell it to another firm. They'll build it even more. And then you have some independently just publicly traded companies. MCore and Comfort Systems would be the best example of that last one, where all they do is operate this network. They have services, they have some technology underneath, but really it's a services business, and they'll go out and buy some of these branches as well.
It's interesting. We could probably unpack this on another episode, and for those who didn't listen, I'd recommend checking out the conversation with Rick because it was super insightful. I guess before we jump on to the next one, there's argument to say that these roll-ups, when you look at them, they may not necessarily be, attractive because they're not the most innovative technology, or they don't have the most innovative technology. But some of these businesses, especially when it's service focused, they can be one really profitable, but also some of the fastest to grow.
Yeah, I think that there's also there's I agree. On one side, there is some back office. I'm saying back office generally, but there's some back office capabilities where you don't have to run multiple accounting departments. You don't have to run. You also, from a staffing point of view, there are cases where you have, a CEO of a business. He might be not ready to retire. You have a kind of his junior partner who's kind of ready to take on more responsibility. What do you do if you have one branch? Well, now you can say, well, hey, do you want to transfer to the 100 miles away? We have another office, and they need somebody to lead that business. So it gives you some more upward mobility opportunities. And I think that's not just for the leadership. That can be really for anyone. So you have some capabilities there. You are able to share knowledge across a wider area. But you also, so I think that's a big advantage. I would say that there are cases where these companies start investing a little bit more in technology beyond just we roll trucks. And I think you'll start seeing that some of these firms, I've seen them acquire smaller technology businesses, companies that maybe have interesting technology, haven't really gained a lot of market share, and that happens too. And I think that'll continue to happen just because they're seeing the technology need from the point of view of maybe we need to deliver services more efficiently. We don't have enough staff to go do all the work we need to do. Can we add some type of remote monitoring so that we know where to go and when to go? We don't have to wait for somebody to call us. And when we go, we know what's wrong.
Okay, cool. Nice. Appreciate the insight there. R0, they were, funnily enough, at NexusCon last week.
Yep.
And this is the second acquisition, I believe, in the last 3 years.
The
last one I remember was Coworker, the data and intelligence software platform.
Exactly. Yeah. So R0 started kind of indoor air quality business, and variety of technologies. I think they had not only focused, but they had focused on medical validated environments where you really do have a higher level of air quality required. They bought Coworker. Coworker is interesting. They're one of the companies, I would say, in the indoor space intelligence market, right? So sensors to monitor where are people, how are they moving, is this room occupied or not? And you can see multiple ways that would fit in. One, if a room isn't occupied, maybe the need for the air to be as clean is not quite as great. But if there is somebody who is there, it becomes more clean. Or you make it more clean. So there's that. There's also just more data about the indoor space more broadly, right? We just want to collect. We have data about indoor air quality now because we have sensors. We now know if there are people there. But they bought SecureAire, which is really on the filtration side. So there's high level, and I'm not an expert here, but there's different ways that you can clean air. One simple way is get air out and bring fresh air in, right? That is one way to clean indoor air. If the outdoor air is clean, that has some issues because you have to condition that air. If it's really hot outside, clean air, but really hot and humid, well, you have to make that air cool, and that takes energy. There's various types of UV and UVC, and that's kind of generally where R0 had been initially. And then there's filtration, right? So think of a HEPA filter, a high MERV rating filter. That's typically what you have in your house. And for particulates, that's really useful, right? You filter out the particulates. So I saw this from R0 as just building a bigger portfolio of different ways to clean air for different use cases, for different scenarios, and just have a more complete offering.
I think it kind of blends, at least from what I can see, into them trying to build what other organizations may seem to or may think they have on the market, which is an end-to-end solution with multiple applications as opposed to just focusing on indoor air quality. They're an interesting business. I think they've raised over 170 million to date. So
it's quite a bit. Yeah, they've kind of emerged as one of the leading independent indoor air quality companies, clean air companies, if you will, for commercial buildings. I would say there's other companies that are more focused on homes. So
okay. This was quite a few weeks ago now, but very important to discuss because both companies have a good brand or a good name in the market. Buildings IoT, the software piece, getting acquired by InfoGrid. What's your thoughts on that?
Yeah, so Buildings IoT, master systems integrator, they're still doing the master systems integration services, but they had built a software platform. InfoGrid had bought Aquacore, which had bought Entic. I saw this as a software. I mean, it's a bit of I wouldn't say I've heard anyone use the term roll up, but when you're looking at energy and digital building technologies or just technology to help decarbonize and digitize buildings, they're building out more capabilities. So to my point earlier on the Nexus event, there are different companies in the market, successful companies that maybe across that tech stack, if you laid them out, and again, you could say it's not just a one axis, you could say it's also an axis by type of building.
It is.
There are companies that, we're really good at, the mush market or universities, and we do this. But they're really, I saw this as a way to elongate, if you will, or spread and do more across the entire tech stack. I think Buildings IoT in particular was pretty strong on fault detection, pretty strong on data acquisition, independent data layer. And those are pieces that maybe there were some capabilities that InfoGrid had, but I would say that they're probably stepping up their capabilities by including these software pieces from Buildings IoT into their platform.
Agreed. And I think they just raised, we may have spoken about it before, at the end of last year or beginning of this year, raised an additional round or a top-up round.
Yeah, I think it was in the mid-teens. InfoGrid did, and they have a new CEO, and so there's been some changes there. But they're certainly looking at where are gaps, where can we add new technology, and different people call me at different times and say they think there's going to be a lot of M&A. Others don't think there's going to be a lot of M&A. That's maybe a topic for another discussion, or we have a guest and we can kind of spitball that and talk through that. But there are definitely technologies out there that I would say, technology companies that maybe haven't grown as much as they would expect. And there probably is a discussion, if not to actually go sell our business. Should we be selling our business? And maybe that happens more frequently in the future as some of these businesses realize we're having trouble raising, we haven't grown as much as we wanted to grow, and this is maybe not, in the case of Buildings IoT, they have a really robust, vibrant master systems integration business. So there was something that they could look at and say, let's just focus on this, not focus on the technology. And to be frank, running a services business, running a technology business, those are different. So there's reasons for them to be together, but there's also reasons for them to be apart.
Yeah, and hopefully we'll try and get Brian Turner on to discuss how that differs, and talking about MSI as well. The final one, which is slightly different to the last three we've discussed, Butterfly and Sunbird, which is more focused around demand response or quote unquote smart grids.
Yeah. So I guess kind of stepping back, so Butterfly is, I would put them in the category of energy efficiency as a service or energy as a service. But the idea there is a bit of a performance contracting like model. Now there's some nuance and some difference. They have historically been pretty focused on small commercial buildings, simpler buildings. If you look at the bigger OEMs that offer performance contracting, they have typically focused on really big buildings, really big portfolios, really complex buildings, hospitals, universities. And the idea there is, you need a complete, upgrade of your chiller plant, maybe as an example, or you need a chiller plant, you need new controls, but you as the local school district do not have the money to finance that. Well, we can do a performance contract. We can do it, no capital up front. So that is a really good model. Makes a lot of sense. And there's been a lot of different businesses that have popped up to say, well, we can do that, but maybe it's a little bit more software heavy, right? We'll use software to drive savings. You don't pay for the software. You simply give us a cut of the savings. But Butterfly is really the first that's really been focused on smaller buildings, right? Like one zone restaurant, two zone restaurant. They've done more. I think I was on their website a couple months ago, and there's certainly other types of buildings, but they're not so far, at least as I can tell, going after a hospital, maybe a medical clinic, maybe a small office. So that's their model. And all of these companies, I would say, when you really dig into exactly how do they structure the contract or the agreement, they're a little bit different. But generally, you as the owner of the building don't pay anything up front. You give some control to that vendor, who then goes within some guidelines and saves energy. And then you save some of the energy and they save some of the energy. Now, there's some specific nuance to how Butterfly does this, but in concept, that is what they're doing. They're confident and they take on the risk to say, we can get your energy down a certain percentage. We'll guarantee that you save a certain amount and we take the rest, or we take a segment or a share of that as well. Now, more and more, you could look at, well, how do you do this in a building? LEDs are one way, but a lot of firms buildings have already delivered LEDs. You could say HVAC upgrades, variable speed drives, other types of just kind of core. If it's a rooftop unit, there's things you can do in the rooftop unit to drive savings. And then there's a whole host of other things, but that extends into demand flexibility. There's a lot of utilities now, or the state regulators down to the utilities, that are saying, well, we'll give you some money if you can curtail your load at a certain time. We'll tell you when. It's probably in the summer, but in California, I think you could argue it might more frequently be in the winter. And if you do that, we'll actually pay you, because we'd rather pay you than go build a new power plant to support that load. So more and more, I think what Butterfly is seeing is the interaction, if you will, or the interactivity between a building and a utility, or a building and the grid, is really important. And there's some savings there, and there's some unlock there. And if we're already putting in more technology in the building to be able to actuate things or change temperatures or just tweak what is going on, we should have kind of a connection. And Sunverge, you probably know them as kind of on that DER's distributed energy resources side. They had some software, and I think Butterfly looked at it and said, hey, this gives us that connectivity to the utilities or to the grid. And it fits in with what they're trying to accomplish beyond just upgrading HVAC. And you could argue for a business like Butterfly, they probably look at the world and say, well, there's some buildings that are really compelled by the fact that they need new rooftop units, or they need upgraded rooftop units. And there's others who say, that's not so interesting, but we get all these demand response days called by our utility. We don't really respond to them because we don't know how, we don't have what we can do. And a vendor like a Butterfly could come in and say, hey, we'll help you with that. You get some of the winnings or the savings, and we get some of the savings. And it becomes compelling.
Yeah, nice. Like almost similar to energy conservation measures.
Yeah. I mean, if you look at if I don't know that Butterfly comes with a menu that says here, but the ECMs would be the recipe, if you will. And it's going to be based on type of building, age of building, what is the equipment in the building. That's kind of related to the type of building. And then utility territory they're in. There's definitely certain utility territories where there's better incentives. And incentive is just, we as the utility will pay you to go do something. It started, LEDs were probably the first incentive a lot of our listeners would remember, where you could get an LED for free, or you could go buy one for a very cheap price, or you could, even now we can get smart thermostats like $100 off, because that is, for a home, a way that the utility can connect to and control both sides of the grid at a very small scale.
Yeah, nice. So. All right, cool. Well, I think that's all we've got time for today. Joe, you've announced, and just for context, we did this this whole series and continue to do this whole series because what you do in your newsletter is, and what you say in your newsletter is everything that we're talking about, or 90% of the time. There may be other stuff that we talk about. Where can people go and find the newsletter if they want to unpack what we're talking about, as well as some of the other themes, partnerships, trends, technologies, investment? Where can they go find it?
So it's on Substack. It's just smartbuildinginsight.substack.com. You can also just go to my website, amadorconsulting.com, or just on LinkedIn. If you find me on LinkedIn, I usually share the link to the newsletter. We actually started publishing. We're going to do it every 2 weeks and break up. We used to have 4 or 5 core sections of the newsletter, and now we're just breaking it up and doing one every 2 weeks. I was informally getting a lot of feedback from readers, and some of them said they like having this one issue a month, and they sit down, have a coffee on a Sunday morning, or we go out Sunday night, so maybe a Monday morning, read it all. But I also heard from folks who said, it's just a lot to read. So my thinking is break it up and try to thematically have two issues with 2 separate sections. So it's not like the exact same format every 2 weeks. It's, this past week we did M&A and partnerships, and some of the focus or analyses we're doing on some of the publicly traded companies that are announcing and talking a lot about technology. And then in 2 weeks or a week and a half from now, we'll do product launches and financing. So startups that are financed. And I know that, it's not like one group is going to read one issue and one group is going to read another issue, but I think breaking it up that way, one, it's not so difficult for us to publish in that way. It's not so much load, if you will, to get 2 issues out. But I think it also makes the issues a little bit smaller and more succinct. The Q&As, we do some of these live. Those will be in certain issues. There's not as going to, there won't be one every issue though. I don't think we have the bandwidth to do that yet.
Yeah, it's already a big task now, committing to 2 in a month. But great. And we've got a couple of good guests lined up over the next month. If you're listening to this, or if you have listened to this over the last 2 or 3 months, and you've got an interesting perspective in the space, or you'd like to discuss a certain topic, then reach out to Joe and myself. We'll put our contact information either on the YouTube link or on LinkedIn, and hopefully we can hear from you soon.
Yeah, that's great. Yeah, we'd love to hear. And I think we'll announce those speakers as we book them. So
sweet. Well, Joe, I'll see you next week, but another good episode. Thanks for your time.
Yeah, thanks, Lewis. Take care, everyone.